What's up, Edge Traders? It's Adam Winnig here. In this video, I'm going to show you how we've helped literally more people pass the FTMO challenge than literally anybody else on the internet. And I know that sounds like a big claim, but I'm going to back it up. I'm going to show you proof that we've helped literally tons. I don't even know I lose count because we have more people passing every single day. I'm going to show you proof that we've actually done that, and then I'm going to break down exactly how they're doing it. Hey, what's up, everybody? It's Adam Winnig here to make your trading easy, lucrative, and fun. Go ahead and click the like and subscribe button to subscribe to our channel to help make your trading easy, lucrative, and fun. Okay, with that being said, I'm going to show you how we've literally helped more people pass the FTMO challenge than any other group on the internet. First off, before I get into it, I just want to show you proof, and then I'll get in and I'll show you the strategy that the majority of them are actually using, because I've had the privilege to actually interview all these people and ask them what they're doing, and there's some similarities amongst them. And this should give you the highest probability of actually passing the FTMO challenge. So before we do, I'll just go in and show you proof, and I'm not going to bore you all day with this, but this is Mitchell Morey, who was able to pass. This is Tyler Turner, who's able to pass. This is Denny Santoso, who's able to pass. This is Darcy, who passed his free trial. This is Patrick, who actually passed in one day. He actually ended up getting funded 3 times $100,000, so $300,000. This is Kim. She finally passed her trial. This is Jay, passed his trial. This is Matthew, who passed in literally one day. This is Casey Gordon, who passed twice already and got funded 100,000 times 2. This is Yuya Kato, who's been trading for a while, and he passed. This is Tan Trat, he passed and got funded. This is Charlie Simpson. This is Rob Francis. This is Sarah, who's able to pass her trial. This is Davine. This is Jeremy Benson, who I literally just interviewed. He passed 3 different times, a 10K, 25K, and 100K challenge. This is Jeremy McKinney, who literally failed for 6 years trying to trade Forex, blew 14 accounts. You can see a video on our channel. I did an interview with him, but he's passed the $100,000 challenge. He actually got funded, and I think he's now passed 3 times as well. This is Callum Laver, he passed, and this is Eric Venden, he passed in literally like a day, and this is Mitchell, he passed actually 2 times. So you get the idea. Now that you see that what I'm going to show you actually works, let's get down and let's actually talk about what the strategy is, because I got to interview a lot of these people and see exactly what they're doing. So let's dive in. Okay, so the majority of these people are using something called the Bank Secret Indicator. It's an indicator that you can get on our site. You can try it out for free for 7 days, only pay for it if you feel like it's worth it. But I'm going to show you how you don't even need to use that or buy that, how you can actually just do it manually. This tool just makes it a lot easier, but this is the strategy that pretty much all of them are actually using, okay? Step number 1 is we're going to talk about the entry. Step number 2 is I'm going to talk about the stop loss and take profit lines. And step number 3 is I'm going to show you what to do for the money management aspect of the trading system. So the first things first that all these people are doing is they're trading contra crowd. Now, what does that mean? Well, in the market, there's 2 people. There's the retail traders and there's the smart money, right? The retail traders are 95% of the time they're actually wrong. And so what do smart B-book brokers do, or what do most institutional traders do? Well, they trade opposite the herd because they know that the herd is wrong 95% of the time. So this just makes it really easy here. I can see that the herd is 29% short and 71% long. So I know that the herd is mostly long and the herd is mostly wrong, so I want to be short. So I want to do whatever is the smaller number. In this case, majority long, so we want to be short. So that's the first thing for an entry, is being contra crowd or being against the herd, because that automatically aligns you with the smart money. Second thing is we want to trade in the direction of the trend. You know that the trend is your friend. This just makes it really easy to see the trend. So if it's blue, it means that it's an uptrend. If it's red, it means that it's a downtrend. So you can see on the minute chart and the monthly chart, which we don't really care too much about, these are uptrends. Everything else is downtrend. We're trading the 1 hour time frame, and we can see that the hourly time frame is obviously red. It's clearly in a downtrend. So is the 4 hour and the daily. I like to look at the H4 and the daily as well, just to confirm that the trend is all going in the right direction. You can trade it just having a downtrend on the H1, but it also helps if you get the H4 and daily trending in the same direction as well. It's just not going to happen as often, but it's going to likely be a higher probability trade setup in this scenario. So 1 is we're looking to be contra crowd. 2 is we're trading in direction of the trend. 3 is we are waiting for a key zone to be formed. So these are supply and demand zones, and they're drawn on the chart nicely. Obviously, you can draw them. Again, you don't need to have the Bank Secret Indicator, but it's just helpful, right, to to compress time for you and have everything in one spot. But basically, supply and demand zones are zones where price bounces off sharply. So it's red, right? We're trading opposite the herd. It's red and it's red. Okay, so boom, we only want to trade when it's red, red, red in this scenario, unless the herd is the opposite way. Back to the key zone. So we wait for a key zone to be formed, and then the last thing that we wait for is some sort of candlestick price action. So this could be like a bullish or bearish engulfing candle. This could be like tweezer tops or tweezer bottoms. This could be like a kangaroo tail, and I'm sure you're familiar with those. If you're not, then just Google them. You could find them really, really quickly. But let's go ahead and put this all together, okay? So we're just going to take a look here on the USD CAD on the H1 time frame. We see that the herd is mostly long, so we want to be short. We can see that the trend is also trending down, and we can see that there's a key zone formed here, okay? So we'll just wait for basically a candlestick to form that would signify maybe the market is going to continue on downwards, which we did here. We see this is known as a bearish engulfing candle. It just engulfs the previous candle. As you can see, it's just all the way bigger than the previous candle. This would actually be considered, I believe, a big shadow, since the entire range is bigger than the entire range of the previous candle. And as you can see here, the market just continues to come down, down, down. Now, as far as where to put your take profit and stop loss levels, a good place to put your take profit and stop loss, well, the stop loss you can put right above this zone. So maybe you'd want to put at like 8, or you could even, to be safe, put at like 10 pips. And then as far as your take profit goes, we like to put it at 2 or 3 times wherever the stop loss is. So let's say that the stop loss is again 10 pips. We'd want to look to take it at like 20 or 30 pips. In this case, you can see it went way past that, but you could see you could just take a small bite out of the market right here. So a 1-to-2 risk to reward ratio or a 1-to-3 risk to reward ratio, always, it's really going to work into your favor. Just as a matter of fact, is we pulled in data from 43 million retail trades. If you haven't heard us talk about this before, we pulled in 43 million retail trades, and we found out that if you simply have a 1-to-1 risk to reward ratio, you're 3 times more likely to be a profitable trader. Okay, so let's take another look at another trade here. So again, we want to be contra crowd, so the herd is long, so we want to be short. We see that the trend is trending down, so we only want to be trading in the direction of the trend. You can see that a key zone was formed here, and we can also see another big shadow or bearish engulfing candle. Really simply, we would have just basically gotten in right here, put our stop loss above the zone at like 18, maybe 19 pips, and put it at a 1-to-2 or 1-to-3 risk to reward ratio. Okay, so there's another textbook example, and here's one other textbook example that you can see right here. Okay, so we saw that it's obviously a downtrend. We want to be contra crowd, and we saw something called a kangaroo tail being formed right here, which is basically this long wick with the body in the lower third. All we're going to do basically is just enter right here, put our stop loss above the zone, and put our take profit at 2 or 3 times where our stop loss is at, and you can see beautifully just played out once again, just like that. Now, the key to making this work, and the reason why so many people have been passing the FTMO challenge, is because a specific money management strategy that we call asymmetric compounding. You can literally pass the FTMO challenge in literally 2 trades without ever risking more than 1% of your account. I know it sounds crazy, and it is crazy. It's mind-blowing once you get the power of this. So I'm gonna put a card or a video right here, so that way you can go and watch that and do that right now, because this is the key to making this all work.